Along the way, I've been laid off a few times. And back in September of 2023, I went back to my first 401k to evaluate it, take handle of it, and determine if empowerment, where I got left off with that investment, was the right place for me. After many phone calls and Zoom calls and time spent on my own combing through their investment choices, I decided that it was time for me to move on. And so I transferred that money over to Fidelity. I was sitting in all cash and I had to get started investing. It was about $126,000. And I put a majority of that amount into FXAIX. It's a red day on the stock market for the Dow, NASDAQ, and S&P. And this is an S&P 500 investment. So I am down 1.52%, which is about $2,900 when it comes to my portfolio. But I'm still sitting on a gain of over 72,000, which is 60.30%. I currently have 753 shares, which has been steadily growing from that initial 120 that I put in. When I got started, I did not automate my investment. Fidelity doesn't allow for daily automated investments. So I was doing them manually, but consistently, in order to get my cash allocated into this ETF and a couple of blue chip stocks. This is not an investment that I check every day. This one is here for retirement. There's going to be pullbacks, but I know there's also going to be steady growth. FXAIX is one of my core holdings because it's simple, it's proven, and steady, allowing me to have high exposure to the top companies in the US without me having to chase trends and different headlines. I'm definitely not babysitting this one. It's an investment. It has a low expense ratio of 0.015%, which is basically nothing. And that means that more of the money stays invested, on track to grow and benefit me, not being lost to fees. It's in my IRA and it'll be there long term, still growing in 2030, 2035 and beyond. Quietly compounding, making more money while I'm out here living my life. In other jobs that I had after that first one, they used Fidelity as the broker for our 401ks. And I was able to even choose FXAIX for my 401k with one of the companies. But if it's not built in for you, you can contact them, open up an IRA, and automate a transfer and an investment and get started on your own. You won't have to think about it. You don't have to time the market when it comes to a diversified investment like this one. You can start with whatever you have. Fractional shares make investment accessible to us all. And I'd rather see you start small than to not be investing at all. This investment is weighted by market cap, so these are the top companies right now. But in time, it will change if other companies take out some of these that are holding these top spots, like NVIDIA, Apple, Microsoft, Amazon, and Google. The current share price is $258. I got started back in 2023 when it was about $150. So this is an investment that is definitely not fancy. Doesn't have to be overwhelming to be on track to have your money growing. Now, let's touch on the dividend. For this last cycle, FXAIX paid 70 cents per share. That came out to about $522 when it comes to my portfolio, allowing 1.984 shares to be purchased and reinvested right back into my portfolio. In time, those dividends will be paying my bill. And so FXAIX will always have a place alongside my blue chip stocks and more aggressive ETFs like SPMO, which captures the momentum of a select group of companies from the S&P 500. As they say, time in the market beats timing the market. I'm staying invested, focused on my retirement, my future, my family. And dips like we had today are going to happen. The Dow is down 2%, the NASDAQ down 1.7%, And as I said, the S&P is down 1.52%, but that drop did not erase my gains. I'm still up about 60% and always staying focused on the big picture, not the day to day. So why did the S&P have this drop today? It comes down to three major pressures that it's facing. A continued sell-off of big tech names like we can see here, Micron, FXAIX, SanDisk. Oil prices are also spiking due to continued fighting when it comes to the Middle East. And we were left with zero clarity when it comes to interest rates. Where are they heading? The Fed decided to leave interest rates unchanged. So those are the type of factors that leave us having a day like today. I'm still glad that I incorporated FXAIX into my portfolio. It's the right fit for me. This is a look at the 10-year performance of FXAIX versus that fund, that target date fund that I was in over at Empowerment. And FXAIX is up about 302%, while that target date fund, MXBDX, is up 131%. In addition to the difference when it comes to the performance, the expense ratios are also drastic. FXAIX at 0.015%, while that empowerment fund has an expense ratio of 0.85%. So I would not have locked in the gains that I've achieved so far if I was sitting in that fund. And now I'm focused on satellite positions for additional growth. So share your wins and your strategy when it comes to building your retirement portfolios, any of your portfolios. Do you have a structure where you are incorporating an ETF or mutual fund for that stability? Let's stay on track to build wealth together. Thanks for watching. Okay, bye.